to Joshua Mahony, the Chief Market Analyst at Scope Markets. Good to see you back on the programme, Joshua. So we saw some green numbers over there in Asia, a good first day of trading after the Lunar New Year holidays. What's behind that?
Yeah, I mean, obviously they've got plenty to catch up on, and if you were to look at the price action we've seen within US markets, you would probably say that they might have been in for a bit of a rough ride. But of course, a lot has happened over the course of that period. Most notably, we saw that Supreme Court decision and the realignment towards a base case tariff of 15%. That, of course, comes to the detriment of those in the UK, where they have a relatively low rate because they already have a trade deficit with the US. It comes to the benefit of the likes of Canada, China, Brazil and India, who had higher rates and now have seen those dropped. So you've got a better trading condition with the US, and we've also seen a record-breaking numbers in terms of spending around holidays, the holiday period in China anyway. So between the tariffs, diversification across the globe, and a little bit of an uptick in terms of sentiment around the Chinese consumer, you can see why we're seeing a relatively strong open to Chinese trade after the Lunar New Year.
So we've talked a little bit about these tariffs and the uncertainty over them, and we've talked about how that's affected the United States and Asia, but what about other markets around the world, Europe, for example?
Yeah, I mean, it's really interesting because, you know, for years we've sort of looked at markets in Europe and been like, God, they're so boring. You know, why don't we have all these amazing growth companies that the US has, and we'd be growing at a much faster clip. That's why everyone always says, just put your money in the S&P 500. It gives you 10% every year. Well, we're starting to see those narratives that have previously benefited the US suddenly provide the reason to not put all your eggs in one basket. Everyone's now seeing these boring stocks as the place to be. And so the diversification we've seen in US markets over the last month have also seen a diversification out of the US and into areas like the UK, because people are trying to essentially judge who the losers are within the AI trade. And that means you need to go back to your bread and butter companies that aren't necessarily tech companies. And that does benefit the likes of the FTSE 100, for instance, which has continued to outperform its US counterpart. So it's in a relatively hot streak at the moment, and I think that's going to continue.
Well, there has been one big growth company in Europe, hasn't there? Novo Nordisk, which at one stage was going from strength to strength. However, its share price has fallen after two things going on: disappointing drug trial results, and also it's cutting the price of its Wegovy drug in the US. Do you think it can bounce back from this?
Oh, it's been a roller coaster ride for people investing in them. I mean, they went up 280%, and they've pretty much eradicated that entire rise now, and it's seemingly just a one-way train lower. Ultimately, they're really just trying to bank on this one product, which is the weight loss drug, right? And they do have a pill format that's just come out in January, so they're hoping that they're going to be able to lift sales off the back of that. But when their trial results come out and they're worse than Eli Lilly, then what you're going to do, I mean, ultimately then you just have to beat them on price, which means constantly undercutting your profit margins. And so lower profits, worse trial results than your competitors. It's not really a great place to be, so I wouldn't necessarily bank on the turnaround story coming anytime soon.
Joshua, great to get your insights today. Thanks so much for coming on the programme. Joshua Mahony there from Scope Markets.